When Canadians shop for a mortgage, we focus very much on a rate. What we don't realize is that if you negotiate, or rather, you make sure to tweak your payment frequency, a small tweak there can make a much bigger difference than any amazing rate you can negotiate. So in today's video, I want to walk you through the mechanics of how tweaking from monthly to accelerated bi-weekly, not just bi-weekly payments, can make an over $50,000 difference in the amount of interest you save on your mortgage over the term. So with that, let's get started. The first thing to understand about how you actually get charged interest is every month or every 2 weeks, whatever your interest rate is, it'll go off whatever your principal mortgage balance is. So of course, at the beginning, you have a much bigger mortgage balance. So there's an upfront interest charge. In fact, interest charges go down versus relative to principal over time because you're decreasing your mortgage principal, and therefore, since the payments generally are, of course, stagnant, you're paying a larger proportion of your principal rather than interest as principal balance goes down over the next 5 years, up to 25 years, of course. So really important. So at the beginning, you got to make sure you're attacking your principal in a way that's not going to make you house poor. So very important to understand, you want to attack your principal at the beginning as much as possible because you're paying way more interest than principal in the early parts of your mortgage. Here's an example. You get a mortgage for $400,000 at a 5% rate, 25-year amortization. This is approximately $2,300 per month of your set mortgage payments, okay? Now, if you're paying monthly across a year, it's very proportionate. It's $2,300 times 12, that's $27,600. Super set, and from there, of course, there's a principal versus interest payment. That's not the point of today's video. The point is understanding over a year, that's how much you're doing in actual payments, with of course, part of it being principal, okay? Now, people, and I thought this for the longest time as well, think that when you pay bi-weekly, because you're paying off the principal, more frequently, it's going to make a massive difference in, well, how much mortgage you're paying and how much you'll reduce your principal. Well, let's actually dig into the math. If you're going from monthly in this exact example on $400,000 mortgage on 5% rate, you're going to go bi-weekly. The way the math works is it actually goes, well, how much are you paying annually, which is that same number, right? 12 monthly payments at $27,600. It anchors onto that number. And it says, okay, well, there are 26 bi-weekly payments across a year. So we'll divide this number by 26. That's about 1,060. What's 1,060 times 26? Well, back to that number. So at the end of the year on bi-weekly, and there might be a few dollars difference that it might give you an edge on bi-weekly versus monthly, but you're anchoring onto the same number per year of mortgage payments as you would with monthly. So that's not going to help you, basically. And that's just the way the math works. Very simple, okay? That's the first thing to understand on bi-weekly versus monthly. There's pretty much no difference. Okay, so how does accelerated bi-weekly make a difference here? Well, instead of them anchoring that number at the end of the year of $27,600 and then going backwards, they're like, wait a sec, no. Let's do the inverse of that. You're paying $2,300 per month. Well, what's half of that? That's going to be $1,150. We're going to take the $1,150 number and we're going to times that by 26 versus anchoring to the monthly number and dividing by 26. And what that does is you go $1,150 times 26 payments, that equals $29,900, which is exactly $2,300 more than the $27,600. You gain one extra payment by going, let's say, from the ground up, $1,150 times 26, then going the other direction. It seems like the same, but when you break down the math, now you're getting one extra payment per year, and that's going all towards principal. So next, let's talk about how does that compound over time on a 25-year amortization. So if you stretch out the math on an amortization table, If you go with option A, paying monthly on this example, the total interest you pay over a 25 amortization, assuming the same rate and no extra prepayments, things I recommend you do in a separate video, you'll pay about $300 of interest in total. Now, if you went on an accelerated bi-weekly schedule, you pay about $250,000. So you save around $50,000, which is about 4 years faster of you paying your mortgage, literally by tweaking from monthly to accelerated bi-weekly. As simple as that. Now you might be asking, Paul, isn't there such thing as a weekly or an accelerated weekly payment? There is. Now, how much do you think you save on accelerated weekly versus accelerated bi-weekly? The truth is, just a few $100s. Surprised me also at first, but the reason why that is because you're basically doing the exact same formula as accelerated bi-weekly. You're slicing the pie in the same way, much better than doing it monthly, bi-weekly, or weekly, but it is pretty much the exact same slicing of the pie. So you're saving a few $100s. So really it comes down to, do you feel comfortable getting your bank account deducted every week just to pay things off faster? Or would you rather time things with your paycheck generally on bi-weekly? Or of course, if you're self-employed, it doesn't matter as much. But yeah, not much of a difference there. And so all this is to say again that you should negotiate the rate ferociously, but it's funny, people forget about accelerated bi-weekly, and this is a $50,000 lift, which you would have to have you have to have like a crazy rate to match the difference you're getting on just tweaking your payments. So that's the moral of the story, and hope this was helpful. And it's kind of the tip of the iceberg too, because like you can have the same mortgage in the same rate, same house, and make a huge difference through just tweaking the structure of your mortgage. And this is just one of many levers. There's things like the Smith maneuver, there's prepayment privileges, there's things like the Manulife One, things I've talked about in other videos, where it's just the mechanics of how you're paying off your mortgage can help you save so much over time on paying the mortgage faster, saving on taxes, then being more room to prepay your mortgage. This is where structures of mortgage really matter, and it's not that much work at all. You just gotta be curious enough to set it up properly with structure and set up the automations. So with that, I hope today was useful and that you are being more intelligent in how you structure your mortgage. By the way, you might be thinking, I already have a mortgage and it's on monthly. Can I change that? Contact me and I'll tell you exactly which lenders charge for that and which lenders do not charge for that. Thanks for watching.